Now, the eyes this week will be on whether the South African Reserve Bank's Monetary Policy Committee will slash interest rates. Crossing fingers with that. To talk to us now about what this all means is Petri Redelinghuys, trader and founder of Herenya Capital Advisors. Petri, a very good morning to you. Take us through how the markets opened this morning.
Good morning, and thank you for having me. So, a bit of a muted start. I guess it depends on where you look. The top 40 index itself isn't up as strong as what some of these retailers are. Some of the retailers obviously are putting out some results, and we are starting to see some very, very large moves. Truworths, for example, was up over 8% earlier this morning. So retailers, I think, beating some of the general market expectations and putting in solid performances so far today. One of the, I guess, things just to be mindful of is that, they've come off the back of a really, really tough, both 2019 and 2020. So even though Truworths is up some 8% at this stage, it is off a lower base, as you can say, sort of mid 2018, the share price was around $100. It is now trading at 39 Rand. So,
yeah.
But, not to throw cold water on the whole thing, it has put in a solid set of numbers and the market is really enjoying it. So it seems that most of the action is sort of on that retailer side at this stage where they are putting in solid performances. Fushini also up around 3.25%, and that really on the back of results. The rest of the market is somewhat muted. The US is quiet, closed today. I think it's Martin Luther King Day. So they have essentially a public holiday and will not be trading.
Yeah.
And the UK opens in about 20 or so minutes, 23 minutes from now. So hopefully we see some volume coming in. But so far, so good. I mean, one of the things I think that also stands out is that gold had a bit of a flash crash early this morning. It fell some $60 in a couple of hours, or in a very short period of time, and has now bounced back and is positive on the day. So that's good news. It looked like on Friday that in the very short term, at least, the gold price was going to come under quite a bit of pressure. But I think that, there's a number of different things happening this week. Central bank policy and central bank announcements all throughout the week. And if we see quite a bit more sort of, accommodative monetary policy and or stimulus packages and or just straight out printing money, that could put a bit of a bid underneath gold. But we'll see. The way the market's been feeling over the last couple of weeks is that it's been very risk on.
Yeah.
And, sort of back in that narrative of, well, the world's coming back to some sort of normality. We've got this vaccine. Things are starting to look better. Retail sales are picking up again. Economic activity is returning. That's been putting a bit of pressure on commodities by means of a stronger US dollar. The dollar has been strengthening over the last 2 or so weeks. I think it is set to strengthen for the rest of this week as well. So that will probably continue to put pressure on commodities and precious metals.
Yeah.
But so upward pressure on equities, right? So it's going to be an interesting week, I think.
Let's look at a bit of company news. Consol Glass saying it is spending 8 million Rand a day. That's just to keep furnaces and production running, even as orders for wine and beer bottles are drying up. Jobs, Petri, as we know it, are on the line. What impact has the latest alcohol ban had on the share price of companies like Consol, AB InBev, or on the JSE?
So Consol itself is maybe not as easy to get access into here, but obviously our sort of big packaging player in South Africa is Nampak. And we can see sort of during the course of last year, I mean, Nampak has been under pressure for some time. Let's be quite honest. It's been about 2 or 3 years now of downtrend. I mean, 2015 really, it was trading around 43 Rand. It's now trading at 2 Rand. So it's you can't really blame the demise of the share price necessarily completely on COVID, but obviously volumes are down, jobs are at risk. And one of the things, if you look at something like SAB, they're now Anheuser-Busch InBev, or so they're not necessarily such a straight pure South African play anymore. But what's interesting is that they were going to do massive investment into South Africa, set up a new factory, create a whole bunch of jobs. Then the first sort of alcohol ban came around. They said, look, we're reconsidering this. We probably don't want to do this. We want to pull out. South African government managed to convince them to stay.
Yeah.
They said they're going to go ahead and invest. And then the second alcohol ban came, and they've turned around and said, well, look, there's no hope of this anymore. We're not making our foreign direct investment to South Africa. We're not setting up our factory. And obviously, this means that we have lost a number of new potential jobs coming to the market. So it's rough out there, right?
Yeah.
Let's be honest. Now we've got load shedding as well. Um,
Yeah.
it's really challenging to grow business in South Africa, and I think that this is something I think you and I spoke about last year as well. The real impact of what happened last year is only really going to start hitting us now.
Sure.
So yeah, well, I guess we'll see what happens, but it does look a bit grim. There is hope. I think that there are a lot of industries that are adapting very well.
Yeah.
Out of necessity. So let's hope that the entrepreneurial spirit of Africa can see us through.
Yeah. And I mean, the question there is, how do you attract investment into a country that is energy insecure? But that's a conversation for another day, Petri. The National Treasury is exploring a range of potential financing options for COVID-19 vaccines, and this includes, among others, raising taxes. Is this a good idea? And where else should they be looking for money as opposed to taxing people who are already so heavily taxed in this country?
Yeah, so we have one of the highest tax rates in the world, actually. Maybe not the highest, but definitely one of. And what's concerning is that the tax base is getting smaller and smaller and smaller. And the risk of increasing taxes is that those who are carrying the tax burden, if you can call it that, are no longer incentivized to remain taxpayers in South Africa. So people immigrate and they do financial immigration, that kind of stuff. And we erode our tax base. And, we see this with states. So if you look at New York, for example, when the tax rates go up, the rich people leave. And tax revenue or tax collection goes down, even though the tax rate went up, right? So it's a very fine balance between, upping taxes and actually increasing, tax collections. So it's that, I think, is a bit of a challenge. I'm not really sort of an expert in this field, so I don't want to comment too much. I think it is an interesting challenge. I hope that if we do take debt, that we take rand-denominated debt and not US dollar-denominated debt. South Africa has been fairly good at that in the past, and that has been to our credit. I obviously have questions around, did we just take a 500 billion rand loan recently?
We did.
We did. I thought we bought scooters with shade nets. I don't know. So I don't know. Yeah. So I'm not really too sure. I guess we wait and see what the plan is.
Yeah.
At this stage, we're price takers, right? We can't really, we can't really put a big list of preferences on the table and expect people to honor those, because we're in a situation where we don't have enough money to even the TERS program. There's no money for it anymore.
Yeah. True.
So we have to find it somewhere, right?
Yeah. And that's exactly what the president has been saying, that there just is not any money anymore to bail out those struggling companies. But lastly, Petri, we've entered the week where the South African Reserve Bank's Monetary Policy Committee is expected to announce their stance on interest rates. How much wiggle room do they have for cuts this time?
Well, I think if you look at their main mandate, it's really to control inflation, right? So, and price stability. That's sort of the primary objective that they have. Obviously, during this time, they've been very accommodative. They've not gone as far as doing any, stimulus program and or printing of money, which I think is a good thing. So yes, we're in a situation where we need money. But the fact that the Reserve Bank has held off with printing more to pay the bills has defended the value of our currency, which I think has been a good move up till now. So I don't expect there to be any changes there. I think that we might see an interest rate cut simply because of the narrative that we're seeing from the rest of the world, where we have this lower rates for longer.
Yeah.
But I don't really see it as all that necessary right now. I think what's going to make a bigger impact is if businesses can operate more normally. I think, for example, lifting the alcohol ban, for example, might help.
Yeah.
Allow restaurants to sell a glass of wine when you have dinner, that type of stuff will have a bigger impact at this stage than interest rate cut, I think.
Sure.
But I don't know. I don't think there's too much wiggle room. I think we'll obviously take our lead from the rest of the world. We go on Thursday, if I'm not mistaken, and there's other sort of central banks that go first.
Yeah.
I think that if we do see any action, it'll probably be a cut rather than a hike. So I would put my money on sort of unchanged to potentially 25 basis points cut.
Sure. Petri Redelinghuys. Well, that's exactly, I think, the prediction from some of those economists who have been surveyed.